In the equity quadrant today, taking a look at the March Nasdaq futures, which gapped lower on the open today. We actually had a low of 17,283.50 near toward the open. That was down 1.73%, and it still looks like that low may not hold up as we have a few minutes left in the session today. The high 17,468.75, that was up 68 basis points, so almost 0.7%. The Nasdaq did finish its second consecutive of lower prices and finished today near the low with very little rebound. At the midpoint of the week, the Nasdaq is working on its first down week in the last 4 and only its second down week in the last 14. So despite this weakness, still in a very obvious uptrend. We had the FOMC meeting today, and while nobody expected them to change rates, they were less dovish in their statement and in the press conference with Jerome Powell than the market had hoped. But they were not hawkish. Powell said he doesn't think the Fed will likely cut rates in March. He said the committee will not be able to adjust rates lower until they've gained greater confidence that inflation is moving sustainably towards its 2% target rate, and they'll be watching incoming data, the evolving outlook, that's the interesting part to me, and the balance of risk going forward. So if they see data that shows inflation is sustainably going, they may move more towards a rate cut. So if we got some bad jobs numbers, things like that, that's something to keep an eye on. That's just my opinion. Now, also yields, we had a short-lived rally post the FOMC, but yields started off lower, then they went lower during the course of the morning. Then after the FOMC, they briefly popped and then ended up down double digits late in the session. The 2-year especially was down about 12 basis points. That's where it really got hit. So lower yields definitely tends to be a little bit of a support for the Nasdaq. That did not happen in today's session because they're moving lower for the same reason that the Nasdaq was.